Hey there. These are the most commonly asked questions that we get with Crypto Renegades. If I don't answer one of your questions, just comment below and we'll get an answer for you. A lot of people say, isn't it risky? I mean, I hear people losing a lot of money. I hear people making a lot of money, and I hear people losing a lot of money. And the fact of the matter is that yes, it can be risky. In fact, you might also know by now, if you've lived long enough on this planet, that no risk, no reward. I mean, you have to go out on the limb to get the fruit. You probably heard all of these little analogies before. And the truth is that if you just play it safe all your life and sit on the couch eating bonbons and watch everybody else take all the risk and make all the money, you will slide into home base at the end of your life unscathed. But will you be happy? Will you be content with the fact that you did nothing your entire life and made zero money? And the truth is you will not. In fact, at the end of your life, you will probably be more proud and happier if you took the risk and made the choices and took the action steps and tried everything, even if it didn't work. Because if you didn't do anything, you're going to look back and say, what if? What would have happened if I would have done that? I would rather not have the regret of not doing anything. That's just me personally. So it's risky to do everything. It's risky to get in your car and drive to work every day. It's risky to not exercise. It's risky to exercise. You could trip and fall while you're jogging on the trail, and you can have a stroke and a heart attack sitting on your couch. So you just got to pick your hard. You got to pick your risky. But I will tell you this, when you do things the right way, you minimize your risk and maximize your gain. And that's what we do with Crypto Renegades. We teach you how to use leverage to your favor and lower your risk to the maximum amount possible by understanding risk to reward ratios and where to put your stop loss and your take profit target, and understanding support and resistance so you know when the most optimal time is to get in to the market or get out of the market. Knowing when the tops are and when the bottoms are helps you to not make bad mistakes. Most people buy at the top and sell at the bottom. And that is the opposite of what you need to be doing. So if you understand the market conditions and you understand market cycles, you'll be able to better time the market, which increases your odds of success. And we have a 70-80% win ratio on our trade. So that's pretty damn good. If you had a 70 to 80% win ratio at the casino, at blackjack, you would be kicked out of the casino for winning too much. So guys, you just have to understand, no risk, no reward. So you're going to risk in everything else. You might as well learn which one that you should risk in and maximize your gains. Because I don't know of anything else right now where the average person can make as much money as you can right now in the crypto space. So get educated, click below, ask for more information, or click the link below to learn more. And you'll be registering for an upcoming live webinar that we're doing. And you're going to see very quickly how you can do this too. I'll see you there. Another common question that people ask is, how much money do I need to start? Well, it depends. What is it you're trying to do? Are you trying to buy a cryptocurrency and just hold it for the long term? You heard on YouTube that Bitcoin's going to go to $1 million someday, so you want to have some of it so that you can maximize your gains. That's called HODLing, or HODLing, as some people say. It stands for hold on for dear life. And let's just say you bought $1,000 worth of Bitcoin, and let's say Bitcoin did go up to $1 million. That is a 10x from where it's at right now. Bitcoin's worth approximately $100,000 right now, give or take $4,000 or $5,000 at the time of this recording. And let's say Bitcoin did go up to $1 million. How much would you make, and would that really change your life? If you had $1,000 with Bitcoin and Bitcoin went up to $1 million, you would basically now have $10,000 with Bitcoin. And that's a $9,000 gain, or a 10x gain on your $1,000. Is that really going to change your life? That might provide you a nice vacation if you sell it. But if you sell it, you're going to also have a capital gains tax, which will take about 30 to 40% of that. That's not the way to get rich in crypto. So the other way would be for you to learn how to trade and understand how to use leverage to your advantage. Whereas you could take that same $1,000, go long on Bitcoin, let's say at 10x leverage, and Bitcoin then goes to $1 million. Let's do the math real quick. So you got $1,000 margin invested. That's your risk. You're at 10x leverage, which means you're playing with $10,000. Bitcoin goes to $1 million, which is a 10x gain. Okay. That's the $10,000 that you would have made with no leverage multiplied by 10. Now you turned your $1,000 into $100,000. That's a big difference. And that's only if you had $1,000 and only used 10x leverage. Imagine if you had $5,000 or $10,000 and you used 20 or 30x leverage. So if you'd like to learn how that works, click the button below, get registered for one of our upcoming live web classes where I'm going to teach this for several hours, where I'm explaining exactly how this works and how you can do it too. So click that button below and get registered for upcoming event. I'll be happy to show you how it works. A lot of people also, they get involved in crypto and they're like, oh, these fees are killing me. I had to pay to transfer. I had to pay to deposit. I had to pay to move it. And every time I sell it, I get hit with a big fee. This is a scam. Well, no, not really, guys and gals. That's basically you're using platforms who are in business to make it easy for you to transact. And in order for them to exist, they have to charge transaction fees, just like your bank does. Your bank charges wire fees, transfer fees, transaction fees, low balance fees, return check fees, insufficient funds fees. That's how they stay in business. You really don't need the bank other than a place where you can send and transact money. Same with cryptocurrency. You need them to open up the account in order for you to buy the crypto to begin with. But once you transfer that crypto offline to a cold storage wallet, you don't necessarily need to deal with them anymore. However, you do need, in order to transact, maybe to buy a good or service from somebody with crypto or to sell your crypto, you need to put it back on exchange, an exchange that can handle that transaction. And of course, there are fees involved. But what I always tell people is this is a small price to pay to play. Okay. Especially when we're trading. There's maker and taker fees when you trade, just like in the stock market. When you open up an account at Fidelity or E-Trade, whenever you do a transaction to buy or sell a stock, there is a transaction fee, a maker and taker fee. It's usually a very small fraction, a percentage like 0.006% of the actual margin or transaction that you're doing at that particular moment. So don't be scared or worried about these fees. It's the price to pay to play in the sandbox, so to speak. So get in the game. The goal is to make a lot more money than the fees, so you don't worry about the fees. I used to tell people who'd be like complaining about the price of gas and complaining about this or that, or your time is the most valuable thing. Okay. If you can learn how to make more money, there's an arbitrage between the time that it takes you to make that money. If you're trading your time at a job, for instance, for $10 an hour, I can assure you that your employer is making more on you than it's costing you. Otherwise, they would not be able to stay in business. You have to produce more than the cost of keeping you as an employee. A lot of people don't think of things this way, but if you're getting paid $10 or $20 or $50 an hour, they must be bringing in $30, $40, $50 an hour because of you being there in order for them to have any profit. Otherwise, if they were just breaking even, they would go out of business. They wouldn't be able to afford to pay you, right? So that should tell you right there that you are worth more than what you're earning and what you're being paid if you work for someone else. So the only way around that, guys, is to earn more than your time than you can actually earn by trading your time for the money. And the only way to do that is to invest the hard-earned money that you already made and worked for into something that goes up in value at a higher rate than inflation and the deflationary US dollar. What do I mean by that? Well, the value of the dollar goes down at a rate of 8 to 10% a year because they keep printing more of it. And the more that's in circulation, the less valuable it becomes. It's not that things cost more. The tools that you buy at Home Depot or the food that you buy or the house that you buy or the car that you buy, it's not that those are going up in price or value every year, although it may seem like that. It's that it just takes more dollars to buy the same thing you used to be able to buy because the value of the dollar is going down. So Bitcoin, on the other hand, has been averaging about a 100% gain per year over the last decade. It will go down over time. It'll go down to 80% per year, 40% per year. Eventually, it'll stable off. Maybe in 10 years from now, it'll stable off about 20 to 30% per year. Okay. And that will still be 2 to 3x more than NASDAQ and the US stock exchange. Okay. But until then, let's just say 100% per year. So Bitcoin is going up at 100% per year. The US dollar is going down and purchasing power at a rate of 8 to 10% a year. So why would you want to sell your crypto and put it back into US dollars? Why would you want to convert something that's going up in value at 100% per year and transfer it back to an asset that's going down at 8 to 10% a year in purchasing power? If you just understand these simple concepts, you would want to get all your cash into investments that are continually going up or at least outpacing inflation, outpacing the decline of the dollar. Real estate is a good example. People invest in real estate because if you buy a 10-unit apartment building, for instance, for let's just say $1 million for the sake of this example, and you put down $100,000 of your own money, you borrow $900,000 from the bank, that's leverage. You're borrowing the money from the bank. Over the next 10 years, let's just say the apartment building goes up in value 10% per year. So in 10 years, now it's worth $2 million. But your tenants paid off the first mortgage of $900,000 over that 10 years down to $400,000. Now, who gets all that equity? You or the bank? You do. Okay. So now you have a $2 million asset that you only owe $400,000 on, that you only put $100,000 down on. That's how you get rich in real estate. Where do you get the money? Well, you just refinance it. You get a new loan based on the new value of 2 million. For 80% of that, you pull out $1.7 million. You pay off the first $400,000 and you put $1 million cash in your pocket, tax free. That's how you get rich in real estate. We can do the same thing with crypto. Once you get $1 million with Bitcoin, $10 million with Bitcoin, you can borrow against it up to 50% of the value of your Bitcoin. There will be banks and there's other companies that will collateralize that, and they'll act as custodians for you, just like the bank does for real estate. And they'll lend you the cash against your Bitcoin as collateral. Guess what? This is tax-free loan proceeds because you don't have to pay taxes on loans. Much better than selling it and getting hit with a 40% capital gains tax, isn't it? So you take that 500,000 that you borrow against your $1 million with Bitcoin, and you do whatever you want with it, including even buy more Bitcoin if you want. Tax-free. But how are you going to pay that loan back? Well, you still own the $1 million of the Bitcoin. Here's the trick. And that Bitcoin continues to go up at 50, 80, 100% per year in value. Your loan payment and the interest on the loan that you just borrowed 500 grand is only 8 to 10% per year. There's an arbitrage. The arbitrage is the difference between what you're paying to borrow the money and what you're earning on the asset that they're holding as collateral. That's how you get rich. Guys, when you understand these simple concepts, you will want to get out of regular dollars and into asset classes that go up in value at a much quicker rate as quickly as possible. If you want to learn more about what I just said, click the button below, get registered for upcoming event. I'll be happy to teach this in detail and trade live right in front of you and show you how we use leverage to increase our gains, something called the crypto wormhole that we coined, because we're trying to collapse time. We're trying to get you somewhere much further ahead in a much shorter period of time. Click the learn button below, get registered, and we'll show you how it's done.